If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started. That's anchor.fm to get started. We are not financial professionals, and this podcast is designed for entertainment purposes only. We are regular folks who do research and present opinions to an audience in a fun way. Our opinions should not be construed with the views of any organizations we may be affiliated with. This podcast does not represent the thoughts, intentions, plans, strategies of our employers. It only represents the opinions of the authors. If you need specific guidance on your own financial situation, please consult a financial fiduciary professional.
Hey, good. Happy Sunday.
Happy Sunday.
I think we have a special guest with us today on the show.
Yeah, I don't think he's arrived yet.
Oh, he hasn't arrived. I'll keep it a secret until he logs in then. So welcome everybody to the Money Vikings podcast this week. Well, while we're waiting for the special guest, I'll just tell you I had an interesting day. Our neighbor passed away, so I got to be honest with what's on my mind. So we have a very wonderful 92-year-old lady that passed away. So it was a very interesting day.
Sorry to hear that.
Heard some of the stuff. I called 911. Anyway, very sweet lady, but that's kind of on my mind at the moment. But the family's over there now, so they're all getting together, and it's actually I don't know if you realize this, but it'll be in a couple weeks. It'll be a year that my grandfather passed away. And as you know, he's a big inspiration to me with investing. That I talk about that a lot with you. Yeah. So I was hoping we could do actually a show about that, one of our next podcasts. So
totally.
Yeah. But hey,
I'm sorry to hear that.
Yeah. Thank you. So since I think our special guest is here. It is Money Viking Bob.
How you guys doing?
Hey.
Good. Hey, Bob.
Coming in
Nice to
hot.
hear you.
So Bob, I got to introduce you. So for our 9 loyal listeners out there in the world,
I love it.
we might even be up to 10. Bob is my brother. And a fellow investor.
Yep.
So welcome, Bob.
Thank you.
Yeah, welcome to the show. We're going to talk today. I'll dive right in. We're going to talk today about the 6 things that people do wrong when buying stocks on their own. This came from a Bloomberg article, and I thought it would be an interesting thing to dive into. And I don't know about you guys, and I want to kind of hear from you. I was thinking about this a lot because one of our big articles, and actually we got a lot of hits today on it. Jerry, is does Robinhood lead to investing addiction? We wrote that. Remember that?
Yeah.
We wrote that article in January of 2019.
Wow.
And so it's kind of apropos. But over the years, us as individual investors, we have gained a lot more opportunity. And Robinhood is like the culmination of it. We're like at our fingertips. We can do anything.
Yeah.
Absolutely.
So, Bob, what talk about your Robinhood experience thus far?
Well, I think it's spot on because it's you're talking about. We have a newer generation of, the millennials, right? We have a new generation of people that are born into the technology, the immediate access, right? And I think these sort of apps, these phone apps, cater and tend to that generation and those type of people where anywhere, any place, anytime they can access their stocks very easily, and place their bets very expeditiously. And I think that's exactly it. Robinhood itself will definitely lead to an addiction, because of how easy it is to do investment, anywhere you are. You don't have to be talking to a broker or in front of your computer.
I know. I know, guys. I've felt it. I mean,
Yeah, absolutely.
you're drawn to it. It's that easy, and that's why. I mean, and I think you guys do similar things. Like one of the guardrails I put on it is that, again, it's no more than 5 to 10% of assets.
Right.
You can't gamble with the 401k or,
Right.
in my opinion, my humble opinion. So,
Yeah,
and
for
then
me,
go ahead,
me,
Jerry.
yeah, for me, Robinhood, I got started with it about 2.5 years ago when a friend of mine sent it to me, and she said it's going to completely change or disrupt the investing landscape.
Mm-hmm.
So I was curious, like, okay, what is so great about it? And for me, it kind of changed my investing style from, more passive to much more active. It sort of enabled me to try different things and to get started taking small risks, slowly ratcheting it up as I learned more. But I tend to learn by doing, and Robinhood was a very good vehicle at the time. Nobody else had zero commissions, so you could make some small bets, and you could
Right.
not have to worry about losing those dollars every time you placed a trade. So I think it kind of enabled me to get a lot more active. And obviously, people think of Robinhood, they think of millennials just going in and day trading all day. But I mean, I think it had an effect on me too, as kind of a Gen Xer that
Yeah.
was a
What
lot.
about old Gen Xers like us, Jerry?
You guys are like practically with walkers now. I don't know what to think of you
Mhm,
guys. I
mhm,
mean,
mhm.
AARP's knocking on the door.
Hey, Bob. Neither of us have hair, so. But, no, I know. I know what you mean, Jerry. And like the combination of for me too, because Bobby and I are classic Vanguard guys, right? We grew up in the whole
Yeah.
Vanguard thing,
Right.
and Boggleheads, all that kind of stuff, Jack Bogle. But I noticed with Robinhood, the not only the no cost, but the just that ease of use, that on your phone swipe left, swipe right thing is so just like, I don't know what the word is. I'm, for lack of a better word, addictive, or just like so satisfying, right?
Yeah. Yeah. You do get that dopamine rush every time you place a trade or close a trade, if
Right.
it's a winning one, of course.
I mean,
different.
I was looking at the other day. I mean, like a firm like Vanguard has lost so much of my capital because I direct so much of it more now to Robin, because I just feel like I have that control, and I can, and like you said, make bets that I probably wouldn't before. I probably would have like hesitated, and it would have been like, I gotta save up like, $500 or $1,000, and then I need to go, log in and do this and
Right.
that. And there was all these sort of like hurdles, and now it's just like, yeah, instantly, like that company, let's try it. So
Yeah.
Well,
Yeah.
honestly, I'll tell you, if it wasn't for Greg, you actually introducing me to Robinhood, I probably wouldn't be where I am now with him, like how intense I am in the investing, because you had you did have to deal with a lot broker fees. There was commissions to the portals you were working through, and a lot of them weren't very easy to use. I know Vanguard's right now not the easiest to use. You don't have this application platform that's very user friendly to very easily place a bet, right?
mm-hmm.
Or buy a stock or an option or what it is. So I think Robinhood, in that sense, for me, it has that lured me in, is it did make it very easy, and I wasn't giving an extra person down the road some money because I was choosing the stock I was going into. These were my choices. And furthermore, I would say is that I was reading an article, Yahoo Finance, about the market isn't reacting the way that it used to. The trends aren't the same because of the Robinhood user. So
The Robinhood effect.
The Robinhood effect, the
Okay.
Robinhood investors, because it is such a grasp in so many people, and especially with the pandemic going on, they have these unemployment checks. They're out of work and they're trying to find ways to invest, and this thing has just caught its footing. They're taking that money and they're rolling the dice in the market. I'm sure there's many success stories out there about it, but there are so many new users that they are actually disrupting the trends, the normal cyclical trends that you would see, because there's no rhyme or reason.
It's a great point, Bob. And it's like, so and that's kind of the whole purpose of this episode. We want to help people, right? We want to help people become better investors, better at personal finance. So how do we set ourselves up? What are the tips and tricks we use? And that was the launch pad of this article I read, because I started thinking, how do we set ourselves up to be successful with something that's Robinhood that could have, let's be honest, that could have a dark side, right? That could have an addiction element, and it could lead to us. And I think I'm as guilty as anybody, leading to poor choices, maybe again swiping right too soon, giving up too soon on an investment. So some of these things I'll throw them out there, and you guys can let me know what you think. So the first one is not testing your trade strategies. I don't know what you guys think of that one, but you guys do more of the options trades than I do.
Well, yeah, for me, I think that a lot of people like to start with paper trading, or they say you should start with paper trading. And for those that don't know, it's kind of it's fake money that you can play with in the real, following real indexes and stocks, and you can make or lose fake money, but you kind of learn, and that's one way to test. I've tried that a few times, and honestly, for me, it doesn't have the same type of psychological effect.
You're willing to go all in one shot, right? I mean,
And by saying that, I don't mean you invest thousands of dollars in little things, but I mean I think my first investment in Robinhood was Ford. It might have been like one or two shares a few years ago, like less than $10, just to kind of get used to it. Another podcast and a guy that I like to follow, Howard Lindzen, talks about the fact that with Robinhood, the first thing you should do is make a trade and lose money. Just get used to that. It won't take long. And because so many people are freaked out when they make that first trade that they're gonna, oh my God, I'm gonna lose lots of money. But once you get over that hump, it's like, okay, I lost some money, I can move on, I can try a different strategy or whatever. But you did it with small stakes.
Jared, and you're reminding me of something that I always, unless you jump in here, Bob, but something I always think about with Robinhood when I'm doing my personal trade with Robinhood. I really consider Robinhood, for me personally, it's entertainment and it's learning. Does that make sense? I'm not gonna depend. If I make a bunch of money in Robinhood, it's gonna be my fun money. It's gonna be that vacation to Hawaii I couldn't afford. It's gonna be that the Tesla that I probably wouldn't have bought. It's gonna be something like that, because I'm not willing to be that sort of swipe right so quickly with long-term, the kids' college fund, or the retirement savings. I mean, and I'm not even saying that that's even the best thing for other people, but that's the way I look at it. But let's see what the second one is. So what do you think about this one, Bob? Second one, they said chasing hyped stocks instead of doing research. I mean,
FOMO. You're missing out. Here's the thing is, real quick to this is going to touch on the first one about strategy, is that these are definitely lessons I know I personally learned. Is you can get lucky, right? You hit a good one, and you think you're on cloud nine. You think to yourself, this is easy. I see another one just like this. I'm going to throw all my money at it, and I'm going to make more money this time. Falls out. Same, now leading into the chasing the money, right? So we're talking about these stocks that, if you're not waking up at 4:30 Pacific time and looking at the pre-market and seeing what it's doing, and you're actually just waking up at 6:30, 7 o'clock, you're late to the game. And if you see something skyrocketing right off the bat, opening bell, and it's going up 40, 50%, you jump on it. Most likely what's going to happen is in the first 30 minutes, first hour of that trading, that stock's going to dive off, because you're going to have the day traders. They're going to sell off, they're going to take profit, they're going to let it dip, and they're going to buy back in, and they'll just lose money and they'll chase profits. So long answer to that is the lessons learned for me is do DD, right? Due diligence, and be the early bird, be up, watch, try to have a little bit of a strategy, a little bit of a game plan. Maybe have your eyes set on some stocks through some research, see what they do pre-market, and just kind of don't throw your money in right at the bell. Wait to see what it does, 10 minutes or so, and then go from there.
Absolutely. Jerry, do you have anything else on that one, or should we go to number 3?
Yeah, why don't we go on to number 3?
Okay. Yeah, this one said making big bets instead of starting small. Yeah, so I totally approach Robinhood this way because, first of all, I don't have. Again, I'm not taking 100,000 out of the 401k and throwing it on XYZ stock. So I'm taking a few $100 at a time when I can afford it, and picking up a few shares of whatever I'm interested in, right? So I guess that one's pretty straightforward.
Yeah.
Anything else to add on that one?
No. I think you covered it. Bob, you have something?
Yeah, this is what I'd say on this is you can have, so there are the stocks out there when you see a little bit of the writing on the wall. There's like we've all been talking about this a lot lately, like buyouts, or if there is a drug that like a lot we're seeing right now with Moderna and Pfizer, for the vaccine for COVID, if there's trials that are going well and you see things building up and there's momentum behind them, throwing the big money at it can be a smart move. Get more of that return out of it, instead of you have a $5 stock and you have $20 to play with and you're going to throw all 20 at it. Okay. But there are also those penny stocks out there. So you're $20 on something that's maybe 60 cents a share, and it's just made a breakthrough and actually can ramp up to $5. You're going to do you way more justice than
right? I'm with you, Bob. And it's like, I think at the end of the day, right, we all have to ask ourselves, we put whatever into something. We have got to ask ourselves each time, how will we feel if we lost it all? Right. And if the question, if the answer is, you know what, I'm going to be able to feed my family, I'm going to be able to house myself, I'm going to be able to clothe myself, I'm going to have a job still. If the answer to the question is in a lot of ways, now are you going to be a little bummed about it? Yeah. Okay.
Yeah. Right.
Yeah. But you're not putting yourself at great financial harm. Then, then if somebody wants to do a big bet, this is, Jerry and I, it's like, it's non-judgmental, everybody's finding their own way.
Yeah.
I'm trying to learn how to trade futures better. And so for me, futures offer a lot of leverage, and with that, big gains, big losses. But what I'm doing is I'm trading in the micro E-minis Australian dollar, and every single tick on those is $1. So I get the benefit of, I've definitely lost money and I've made money, but I'm learning how these things move. And it's only $1 a tick. So, the average daily move for these things could be, plus or minus $50. And I'm okay with that kind of loss or gains while I'm learning.
Jerry, on those, do you have then like a lateral, limit and floor on those things where you can say, like, do you going into the futures trade, the maximum amount you could lose?
Yeah.
Okay.
I do. I set up, and I think you asked me this a few weeks ago too, and I know it's an important topic to cover, but when we do enter trades, it is a good idea to set stop losses and targets. And, for these Australian dollars, I'm still working on my profit and loss. I'm trying to make my wins bigger and make my losses smaller. I'm still working on that. I'm not there yet. But when I do these trades, like I started last week with a buy of Australian dollar at a certain amount, let's say 71.60, and then I set a stop loss $20 below at 71.40. Now over the weekend and tonight, I'm watching it right now. It went up to 71.88, so I'm up a bunch. I've moved my stop up a little bit, so now if it suddenly declines, no matter what happens while I'm sleeping, I'll make $10.
you're in plus.
Yeah.
That's great.
Yeah.
Because hey, the reality is being a good investor is being a great manager of risk,
Yeah.
and that's really what it is. And a little tidbit right now, staying on this topic of the bigger bets is, we know coming up on the 28th, it's initiated with Tesla getting a 1-to-5 split,
Yeah.
Apple doing a 1-to-4 split, and this is something where I think right now is the absolute perfect time to do it, especially when we start talking about these Robinhood investors, because you have people who now can afford those shares, who weren't going to drop $1,600 on a stock, who weren't going to drop 400, $450 on a stock, right? It's going to actually be palatable, and they will dive in, and that will, in theory, drive that price up. So, speaking on the topic of the big bets, looking at Tesla and Apple right now, those would be great ones for the month of August, and probably waiting in a day or two after the split, so it takes effect the Monday after.
This is exactly why I wanted to talk with you guys about these, because I knew you would have such a dynamic view on them, because I don't necessarily agree with all of them, and so it's just like, again, rules of thumb are good stuff, but like, there's exceptions, and that's what I think we're kind of fleshing out here. Here's another one that I think has an exception to it. So it says, investing money you need in 5 years. Well, I don't agree with my Robinhood account. With my 401k, I would say I should leave that alone, go long haul on it, U.S. growth stocks, tech, blah, 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 balance it out with some bond funds. But in my Robinhood, if I make my mind a nice profit, in fact, I did this last week, I take some profit because I want to, I have a house repair. I have something that broke on the house, of course.
That's what it's there for. It helps, right?
Yeah.
But I wasn't putting that money in there thinking that, I'm going to just let this sit in Robinhood for 5 years. No, I was thinking if it makes money in 2 months, I'm going to take it. So,
well, there was a moment where I was afraid that Robinhood wasn't going to exist anymore when they started getting fined, and then they that unfortunate suicide that happened recently from an investor. It's sad, and you're right. Robinhood, honestly, in my opinion, I don't know if it's going to be there 5 years from now. I'd like to think it is. I don't know what's going to happen.
It's funny you said that, Bob, because Jerry told me, Jerry, I don't know if you remember this. You said that to me years ago when we first started. You made that comment to me. You're like, well, sometimes you got to be careful with these new ones because, you're not sure where these platforms are going to be. You're pretty sure Vanguard and Fidelity are going to be around.
Right.
Yeah. I think there's something to be said too for diversification. I'm not saying open up tons of different brokerage accounts, but it is nice to have different funds and different accounts in different places. So if one does go bust, you kind of have that protection. With Robinhood too, they've had some pretty serious outages where people could not trade.
Yeah.
They also ran into that fiasco where they were adding a card and some interest rate. They were going to give, I forget what it was, 2 or 3 or 5% interest on all cash. And then it turns out they hadn't talked to FDIC or SIPC or whatever. So a lot of bad press and a lot of interesting things. But I did not write the best review of Robinhood on the blog a few years ago when that stuff happened, because I hadn't seen those kind of outages before in any sort of brokerage firm that I've ever used. But it seems like they're gaining traction, and I've heard rumors that they may go public too.
Yeah, that's in our article, and it's funny you brought that up, Jerry, because Bob, I don't know if you realize this, one of our most popular article of all time on our blog on the moneyvikings.net, moneyvikings.com, is Robinhood versus Cash App, and we get it for some reason it got really good Google SEO, and people when they type in I don't know what they type in, Robinhood or Cash App. Yeah. Our article comes up quickly.
Really?
People, we seem to get tons of clicks on that thing.
That's funny. That is funny. It's cool though. You know?
Yeah, I mean, it's all good. So, yeah. So so here's another one that I'm going to bring up that, again, I actually don't think I agree with this one because of what I said earlier about the way I look at Robinhood, which is kind of as entertainment and a learning platform. So they say, it says when you buy stocks, don't obsessively check your portfolio. Well, I obsessively check Robinhood every day.
If you're, and I am with you on that, because when you're into a very technical trade, and there is something you're looking for, a catalyst, or there is maybe a piece of bad news, and this thing is a delicate piece of rice paper. You're gonna have that app open all day, or at least have your notifications on, and your phone off vibrate. Yeah, it does become obsessive, and especially let's be honest, that there are people who may be looking to make a career change and want this to change their life, and that
well,
may be
a lot of people have been home during the pandemic doing this,
right? They don't want to go
yeah.
back to an office job. They want this to pan out.
Yeah, well,
I know. Yep.
Yeah.
I'm going to say on
it's a gamble.
Aggressively checking your portfolio, I think the spirit of the article was about long-term investing. And what we're talking about, some of these things, if some of the stocks that we're looking at have buyout offers, or if I do an options trade and there's an earnings report and I need that to happen, I'm going to be curious whether or not they exceeded or deviated outside of the standard deviation of the trade that with the targets I set on both sides, on the upper and lower bounds. I mean, so trading currency, for me, those are my time frame, and those could be anywhere from hours to a few days. That's about it. But then the 401ks. Yeah, I mean, I'll look at the balances at the end of the day and just kind of see where they are, but I'm not. Those aren't the ones that we're checking all the time. So that's my only comment on obsessively checking your portfolio.
I'm with you on that, because the thing is, if it is your 401k, I just think to myself, and I think Greg, you and I have talked about this in the past, is that's something that you maybe you look at it to do a portfolio mix, shift it around, but aside from that, maybe not peek at it until you're ready to hit that retirement zone. If that's a long-term investment, don't obsess over it. But I don't know. I mean, what is the right answer?
There is none.
I mean,
right.
So, and again, there's all these things are very dynamic, and there's always a flip side. So there's a famous, there he is. I don't know if you guys have read this guy, but I really encourage people to. But the flip side of all this, and again, on a lot of these things, we actually all do both. But there's a very famous behavioral economist named Richard Thaler, and I think we've written about him in some of our articles, Jerry. But Richard Thaler is famous for how people are completely. He basically I'll just be quick about it. But the classic example, like the classic models for economics, basically thought that people acted in a rational manner in their own best interest. And this guy, Richard Thaler, blew the lid off that. And he's like, people don't act rational. They do not act in their best interest. Right. And one of the things he always drives home too is that he has a very passive way of investing, which is, and it's just it's the basic thing we talk about, S&P 500 index fund and, a couple bond funds. And he basically calls it a lazy way of investing, but he'll constantly bring up that it's done very well for him. Like just not looking and not caring.
Yeah.
But again, it's all about balancing these things, just keeping in mind. But yeah, I definitely look at my Robinhood too often. But at the same time, we got to keep in mind too. I mean, we have children, we have jobs, we can't, so the word obsessively has to be sort of, I understand what you're saying, Bob, definitely, keep an eye on a trade when you have it set up. But, we have kids that need our attention right now, especially now during the pandemic. They always do, but now is a critical time that they need to feel love and safety, a sense of safety in this world right now. So, I would just say to somebody hey, have fun with it. But, if you're on Robinhood all day long and you're not paying attention to your kids, then you got a problem.
Absolutely.
But that's, my 2 cents.
Yeah, absolutely.
Great.
You guys are good at this. Oh, go ahead. Go ahead, Jer.
I think you skipped one too. The number 5, getting into complex trades before ready. I like that one.
Going back, man. Yeah. You guys are, and I gotta say, you guys are both. I find inspiration from both of you guys because I think you both do a good job of this. You both. You're both more complex traders than I am. I'm a pretty basic guy. Can we say butt on a podcast?
Absolutely, man.
But you guys do a good job of really like learning and testing out like your complex trades. I think before you go into them and find out if it's right for you. So
yeah, my thought on that I wanted to say was that there are, for options trades, which are kind of one of my favorites, there are so many different types of trades that are possible. So, iron condors and spreads, and are you going to sell? Are you going to buy? And, broken wing butterflies and whatnot. At the end of the day, I'm probably the most comfortable with strangles and iron condors, and the reason is I know how to manage them, and I know how to adjust when they go, one way or the other. So when I see other trades offered, and the Tastyworks platform, you can literally just go into some traders' backlog and clone a trade that they've done. It's very easy. It's too easy. Yeah. But I won't enter those unless I know how to manage them, because it's very easy to enter a trade and just hope for the best, but it doesn't always go that way. And so you do have to take steps to manage it. And if you don't know how, it's probably not a wise move to enter those.
I will say, Jerry, like, my hats off to you with the options, because you heard me say this before. Sometimes you talk about it's like rocket science, but you really do take it to that next level, and you've fully grasped it and experimented, right? And you're trying to you found out what you're comfortable with and what works best. And I definitely applaud you, because
Thanks.
In my I kind of do the beginning level, the training wheels options, right? It's very just straightforward. But back to my just initial point, comment when we started was it's due diligence, right? I make sure that I do due diligence, and we may go on here and see an article. You may see a tweet. Some of you are following on Twitter that's doing investment stuff. Stock twits, like, people make these comments, and you never want to react or invest based off of what somebody else is telling you. You got to do your own research and your own due diligence to ensure that you're comfortable and you're grasping and understanding what you're getting into. And
it's very Buffett of you, Bob.
Thank you, sir. Thank you.
Yeah.
Thank you.
I love it.
Text in the mail to everybody.
And I love you.
I love you. I love you, man.
I hope so. You're brothers.
Yeah, right. But the thing is, it's I lead with that before I go into an option, and that will actually determine whether I do just one of the straightforward options, like do a call that has I determine what my expiration is going to look like and I determine if I place my option call in the money or out of the money. How risky do I want to be? What's going to be my cost to get put skin in the game, and looking at what that return looks like, and making sure that leveraging tools like the options profit calculator to see, right? Yeah. To see if I'm going to have a good payday if taking this little gamble.
Yeah.
So, yeah.
If folks are interested in more too, Jerry does a great job of he does a trading journal on themoneyvikings.net.
Yeah,
so
it's great.
Check it out. It's kind of cool. Well, guys, the time always goes so fast because we have such a great time. I'm so thrilled, Bob, that you joined us.
Yeah, it's been an honor. I appreciate it, guys.
Yeah, this is awesome. Can't wait to hear this. I'm gonna say some parting words, and then you guys can say some parting words. Again, I always like to mention, again, we have it good. Have gratitude out there, because the world is, going through a lot right now. A lot of people struggling during this pandemic, and I always want to put out sort of our love and thoughts for those people, because it's not an easy time for any of us, and our kids. It's a hard time, and we're getting through it, but we're gonna get through it. So be good to each other. take care of people, manage your assets. We're going to be fine. We got to get through it and give the scientists time. That's what I keep saying.
Yeah.
So, okay, guys, last word. You guys get the last word.
Go for it, Jerry.
I'm just kind of keeping my eye out every week for different trades. Nothing super crazy, but I've been watching a lot of the precious metals lately. Silver and gold. They initially shot up quite a bit and then pulled back. So the one trade I did on Friday or Thursday last week was a strangle in the silver product, the not the future, but the ETF SLV. So as long as it stays between something like 20 and 30, and it's around 25 right now, I will make money. So that's a fun one and not too much risk. And so that's kind of what I'm keeping my eye on. Bob, you got anything?
Yeah, I think for me it was kind of touching a little bit on what you're speaking to, Greg, is that there are people out there that may not have a lot of funds available right now and don't want to stretch themselves too thin. And I think taking the advice, kind of things that we're mentioning that are being mentioned on the podcast, on your guys' blog, of maybe stocks that are up and coming. When I talk about the splits that are coming up, it's a great way to maybe you spread yourself thin for the moment on that stock, but it's because you see that there is this potential, there is this way to actually grow out of it. And I think that's kind of big, is trying to find a way where you're not throwing darts blindly. You're looking at, there's a big potential down the road to kind of make profit. And then something you taught me, Greg, is that once you've made more than your initial investment, take that initial investment out and just make it play money at that point. And that way there's no emotional, well, there's emotional attachment to at some extent, but it's not from your bank account paycheck. This is the fun money that you try to grow.
Oh yeah, I'm glad you brought that one up. Yeah. I love that trick.
Yeah.
Yeah. Well, hey, thanks guys.
Absolutely.
Yeah. Good times.
Awesome, Jerry. Awesome, Bob.
Yep. All right, guys.
Take care.
Take care.
Till next time. Bye. Have a good week, everybody.
You
Bye.
Bye.